Hello, and a huge welcome to this discussion, which has been arranged by the experts over at Pro Tax Accountant. We're going to be talking about one thing and one thing only: how you can legally and effectively pay less tax.
And, how true is that? Let's be honest. The UK tax system is, well, it's complicated. And it's so frustrating to think that a lot of us are probably overpaying just because we don't know all the little rules and reliefs that are out there. So here's our game plan. We're going to take a quick 5-step journey, starting with the basics and building all the way up to your own personal action plan.
All right, first things first. Before you can save a penny, you've got to understand exactly how your tax bill is put together.
Okay, so this is really the foundation of everything. You get your first chunk of earnings, that's £12,570, completely tax-free. Nice. After that, you hit the 20% rate. But the big jumps happen once you earn over 50 grand. That's when you're suddenly in the 40% bracket. And for the highest earners, it's 45%. You can see right away where the key pressure points are for smart tax planning, right? But wait, it gets a little more complicated than that. Those official rates we just saw, they don't always tell the whole story. Would you believe that for some people, the actual tax rate on a slice of their income can be a massive 60%? Yeah, you heard that right. So what's going on here? Well, this is what's known as the 60% tax trap. As soon as you start earning over £100,000, HMRC starts clawing back your tax-free personal allowance. And because of the way they do it, it creates this ridiculously high effective tax rate on your earnings between £100,000 and about £125,000. It catches so many people completely by surprise. So, quick question for you, and be honest. When was the last time you actually looked at your tax code? Because here's the deal, mistakes happen. HMRC isn't perfect, especially if you've just switched jobs or your circumstances have changed. An incorrect code could mean you're paying too much tax every single month. And you know what? It's actually your job to check it, not theirs. A simple 5-minute check in your online tax account could literally put hundreds of pounds back in your bank account. It's a no-brainer. Okay, now that we've got a handle on the basics, let's move on to some really practical tips. These are the quick wins that pretty much everyone can take advantage of. First up, the marriage allowance. This is a great one. If you're married or in a civil partnership and one of you earns less than that tax-free personal allowance, you can basically transfer a slice of your unused allowance to your partner. It's super easy to apply online, and it can save you up to 252 quid a year. Free money, basically. All right, next, ISAs. Seriously, you should think of an ISA as a kind of tax-proof wrapper for your savings and investments. Every single year, you can stash up to £20,000 in one, and all the growth, whether it's interest, dividends, or any profits you make, is completely 100% tax-free. It's one of the most powerful and simple tools out there for everyone. And what about giving to charity? Well, you should always tick that gift aid box. It means the charity gets an extra 25p for every pound you donate straight from the taxman. But here's the kicker. If you're a higher rate taxpayer, you can claim back even more on your own tax return. So it's a win for the charity and it's a win for you. It just makes your giving go further. Okay, let's start getting a bit more tailored now, because the best strategies really depend on your own situation. Are you an employee? Are you self-employed? Or are you running your own business? Yeah, when we talk about claiming expenses, there's a world of difference between being employed and self-employed. If you're an employee, you can claim for very specific things your job requires that your boss doesn't pay for. Think uniforms or professional subscriptions. But if you're self-employed, whoa, the game changes. The door swings wide open. You can deduct a whole range of allowable expenses. We're talking office costs, travel, even a slice of your home utility bills. It's a massive way to lower your tax bill. And for all you employees out there, don't think this is some complicated process. It's really not. You don't need to be an accountant. Just keep your receipts, check if there's a simple flat rate deduction for your type of job. Many have one. And then you can just pop the claim in online through your HMRC account. It's designed to be pretty painless. Now for you company directors and business owners, this is huge. How you take money out of your company is one of the most important decisions you'll make tax-wise. Just paying yourself a massive salary is almost never the best way. As this chart shows, taking a smart mix, usually a small efficient salary and the rest in dividends, can slash your overall tax bill. It's all about navigating the different rates for corporation tax, national insurance, and income tax to find that sweet spot. All right, we've talked about the here and now. Let's zoom out a bit. Let's talk about the big picture. Planning for your financial future and building wealth in the smartest way possible.
And when we talk about long-term planning, there's one thing that stands head and shoulders above the rest: your pension. I want you to stop thinking of it as just a retirement fund. It's actually one of the most powerful tax-saving tools you will ever have. And this right here is the magic ingredient. The tax relief is just incredible. For every pound you put into your pension, the government automatically adds more. Look at this. If you're a higher rate taxpayer, a £1,000 contribution to your pension only actually costs you £600 out of your pocket. Think about that. That is an instant 66% return on your money, right there, before it's even had a chance to grow. There's nothing else like it. Okay, so we've covered a ton of stuff, but here's the most important part. Knowing all this is great, but the real power, the real savings, come from turning all this knowledge into an action plan that's built just for you. So let's just boil it all down. What have we learned? It's really a three-step process. First, you've got to understand your own tax bill and what allowances you have. Second, you need to act on those easy wins, like ISAs and the marriage allowance. And third, you have to plan for the future using the big guns, like your pension. And that really is the main takeaway today. Look, all these general tips are a brilliant starting point, but a strategy that's actually designed around your specific life, your income, your family, your business, your goals, that's where you can uncover thousands of pounds in potential savings. So I'll leave you with this one question. Are you absolutely sure you're not leaving money on the table for the tax man? If you want to create a plan to make sure you're as efficient as possible, the team at Pro Tax Accountant would love to help. You can get in touch with them on WhatsApp or by phone at the number you see on screen, or just drop them an email. Thanks so much for joining this discussion.